Hey, what's up? Welcome to DGenEd. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts and going over data. And so here we are looking at Rocket Lab, ticker symbol RKLB, which closed on the day today, Thursday, February 27th, at a price of $19.83, being down about 6.7% on the day. But it does look like they reported earnings today in the after hours, I imagine, because the stock price is down about 15%, trading currently below $17 a share. And so I wanted to go over where I think this might be going. And before I do that, though, I am just going to flip over to that 10-minute time frame so we can see the big drop down here. It looks like they announced their full year fourth quarter 2024 financial results. And I'm not going to get into those details. I really did just want to go over the chart. And, the reason why I wanted to go over the chart is because I was contemplating what to do with a very small position that I have with Rocket Lab. And because I noticed some data today on unusual whales that looked bearish, and I was contemplating buying a put, but I did not, and I kind of regret not doing that. But at the same time, you got to be managing risk and managing the amount of cash on the sidelines. And so I did not want to partake. And so for me, for my position, I started accumulating, basically just got one share up here, thinking that this downtrend would eventually be breaking out and we'd be doing a little bit of a move like that to get new highs, getting past 33, 34. And then, as it started to break down, testing the base of that channel, I got another share. And then I think around 23.42, which was the low from, it looks like, January 14th, I got another share. And then I just kind of pumped the brakes. I was looking for some data in unusual whales to either push me bearish or bullish. And I just wanted to have a small position to kind of follow along. But now, with February ending, with the last day of the month being tomorrow, Friday, February 28th, I was thinking, well, maybe I want to exit this position. Just it's only 3 shares less for me to be thinking about. And because I think that this might be going lower. And so I wanted to talk about that. Also, because something that has been said, if you follow Colin Gladman, this is a quote from him. He might have taken it from somewhere else because it sounds like a classic quote. But if not, he has this saying that is, there's nothing more bearish than a failed bullish move, or vice versa. And so what we were seeing up here, it looked like this was trending higher, we were going higher, but then we started to break down here. We didn't even get a retest, which is quite the possibility that we do bounce and get to that uptrend that had acted as support over here. I'm just going to make that line a little bit thicker so we can see it better. And so it's quite possible that we could bounce to around $27, maybe $28 a share. But considering that we're trading in the after hours below 17, I feel like that is unlikely at this point, and that this is probably going to be going lower. And there are a few reasons why I think this could be going lower. One, this is just a little bit arbitrary. As you can see, I do have this Fibonacci retracement up here going from the low from January 14th up to that high of 33.34, which was hit on January 24th. And so I had some levels here. I was thinking that the 618 here right around 27.21 would be acting as support. That unfortunately broke down on February 19th. We also went through that 50-day moving average in yellow there, which is currently around 26.62. And then shortly following that, breaking through that uptrend, and then also the 786 at right around 25.50. And then it just continued down through that low. And so there are some levels to the downside, like this 1618 is just a continuation of that Fibonacci retracement. That is at 1729, and currently we're trading below it. So, that is, kind of an arbitrary level there, but just something to kind of keep an eye on. And and then we also have this gap over here. We have another gap couple days before it. So on November 8th, we gapped up, but then I have this line drawn here based on the close from November 12th, which was at a price of $14.66. You can see that marked there by that blue dashed line. So from there, we gapped up and we have not yet filled that gap. And that's not saying that we have to fill that gap. We don't necessarily have to. But the thing that does make me think that there is, a little bit of a magnet pulling it down at this price, at this point, is the 200-day moving average, that blue line here, that is at a price of $13.44. And I feel like that line could be, moving up just a little bit to get to where that gap fill would be. And so I think that price could be coming down to sub $15. So I would be cautious of that. And one other reason that makes me think this could be going lower, if I do a Fibonacci extension, so not a retracement, an extension, going from the high from February 18th, coming down to the low that we hit over here, which was 1978, but then it does look like we actually hit a little bit lower than that today on the 27th, hitting a low of 1976. But either way, I'm just going to go to 78 from this low, where we then bounced up to the high from today, which was, let's see if we can get it to stick there. The high was 22.16. So I got that mark there. So we got this nice Fibonacci extension. And if we do take a step back, that would put price at $12.15, being even lower than that 200-day moving average. But of course, that could be fudged a little bit. Maybe I move that extension to back over here and that goes lower. But really what I was looking for is just something to kind of coincide with these other levels here. And so while 12.15 is, notably lower than 13.44 or 14.66, there's kind of a range there where I think we could be getting to. And if you're wondering why I have this alert here at 15.42, it's basically because if price does go below 15.42, I believe that's a 40% loss for me on my 3 shares, so it's no big deal. But I was thinking of just cutting the loss at the end of the month if that alert does go off. Or if price does bounce to, I think, 17.99, then that would be a 30% loss for me. Just thinking again to kind of clean up my portfolio, do a little bit of housekeeping at the end of the month, because I just feel like, we've just had too much of this up here, and it started to break down, and I feel like it's coming lower, either to around $15.50 or really, like, worst case scenario, around $12 a share. And so, one thing that I did want to look at to kind of complement going over the chart here, because I'm sure if some of you are OG subscribers to the channel, that, I'm not always right with my analysis. And, I did get left behind with Rocket Lab, but I do like the stock and I like the community. And so one of the things that I like to do to kind of complement my TA, my analysis over here, is to look at data in unusual whales. And so what I like to do is I just track a few contracts that stand out to me just kind of as curiosities. I also have some other ones that I'm in. And so one of them that I was kind of considering hoping to get into is a Rocket Lab call, the $50 strike that expires in January of next year. Over 300 days between now and expiration. I like to look further out into the future, but that's a $50 call. And so I was basically, taking a step back, thinking that, maybe I got to take a step back on the weekly to see. I actually don't know why I picked $50. I was just thinking that this would, continue higher, like up to here, that would be around $35. And so, yeah, I was just keeping that on my radar. But what stood out to me was the data over here, the premium data from today. So I'm just going to expand that into the next window, which I actually already have that tab open. So I'm just going to open it here. And so what we can see, this is the premium data for February 27th, the day of earnings. And what we can see is a lot of red volume. So it seems like, this is negative. So there's a good amount of selling of contracts as far as I can tell. Probably just taking some risk off the table before earnings. And then we do have the stock price, going up a little bit here, but then blipping down and then kind of just consolidating as it faded throughout the day with kind of a sell-off towards the end. And then what we see in the green is the net call premium. So that was positive, so that's good. That suggests that there was buying of calls, but that really just kind of floated up over the course of the day, so nothing too notable. But what stood out to me and what I've been realizing I need to pay more attention to with unusual whales data is not just the fades up, because that's effectively just retail small positions adding, whether they're going long, whether they're short, it's following the sheep, following retail. I don't necessarily want to do that. I want to herd the sheep, or I want to hunt the sheep, whether that's a wolf as a sheepdog or a shepherd. I want to understand the big picture. That is my goal. And so what we see here is actually not in the net call premium in green, but actually in the red, the net put premium. We see this big spike here. And so the net put premium went from just before, let's see, around 2:30 in the afternoon Eastern, the net put premium was around 200,000, and then it spiked up to 1.26 million. So that's about $1 million jump up there. Pull back a little bit over here, but then right here, just before the end of the day, it looks like we saw a dip in that net put premium coming down to around 900,000. But then just at the end of the day, it spiked up to around 1.8 million, 1.9 million actually. And so we see over here the net put premium for the day. It looks like it increased by $1.91 million, whereas the net call premium increased by only less than, $500,000 there. So generally, this doesn't necessarily look so good. If I do look at the bear bull slider here, 49%, which is the majority considering that neutral, that is the majority being bearish. And, so the majority there did seem to be right with what we're seeing around earnings. But what I wanted to look into is just see what the contracts are that correspond with these spikes. And so the way that I can do that is if I just go over to the flow for the day. Kind of new at doing this, but I got Rocket Lab typed up here. This is just for the day of February 27th. And then I do have the minimum premium set to $100,000. So we're looking at, the bigger buys, no small fries here, only the whales. And so what we can see for the day, just looking at this premium column here, we can see that there were some pretty big buys here. Looks like here, this was a $346,000, actually a call, and that happened at the beginning of the day. It looks like right around open, and so that probably would have corresponded with this jump up here, so that net call premium. Actually, I am not actually too sure. If we do look at that contract, it's a spike in 346. Do put this just to the 1 day data here. Yeah, just a spike at the beginning of the day. And so, this is actually not what I wanted to talk about with this video because I wanted to look at, these spikes in the puts. But it is interesting to see that spike right at the beginning of the day. But the spike over here only corresponding with a net call premium, the number you see up here being, right around 160,000. So I just find that to be interesting. But anyways, let's escape out of this and look at some of those puts that I was looking at towards the end of the day. So looking over here, this one was right around 2:30. So let's look here at the times. Right around 2:30, there was a pretty, some puts, it looks like, being bought right around 2:30. And so we can see some were the $22 put expiring in April, others $23 in April, just kind of a range of them. But if we look at the premiums over here, the ones that really stood out, this would be the over 200,000 in premium there for that $23 put that expires in April. And so I can just expand that so we can see over the course of the day, that is about $500,000, 1,000 candles there, all being on the ask side. So that does suggest that they were being bought. And what we can see in the data that's over here, Ed's actually in the way, so I'm going to ask him to step aside there. And so we can see that open interest on these puts just a few days ago, so on the 25th, open interest was only 500, but then we saw an increase in volume of 1,700, which resulted in an increase in that open interest by about 1,300, and that open interest going to around 1,800, being pretty consistent into earnings day. But then today on earnings, we did see a volume for this contract of about 1,200. And so we'll have to see how this opens up tomorrow. If that open interest does continue to go higher, I suspect it will, because it does look like we're seeing some buys over here. And then just at the very end of the day, if I do escape out of that, we can see right around here, right at the end of the day, we did have some puts. It looks like a $20 put expiring in April, as well as a $23 put expiring tomorrow. So that's kind of a risky one. And we actually, both of those had more than $300,000 on them. So if we look at this put that expires in April, it's the $20 strike versus the one that I was just looking at was the $23 strike. So yeah, let's look at this one. And so we can see over the course of the day, we did see a couple spikes. And with this contract, we did have, let's see, open interest for this one has been pretty elevated. We've gotten like thousands of contracts that have been maintained open. But then on the 24th, we did see a volume of like 1.4 thousand contracts that led to an increase in open interest of about over 500. Going to 3,200 open interest. And then we did see actually a little bit of a dip coming below 3,000 open interest for today. But with that volume today of 1.8 thousand contracts, will be interesting to see if the open interest does go up into tomorrow for this $20 put that expires in April. And then, so I'm just going to escape out of this. Look at this final one that looks like it had a premium of around $374,000. This one expires tomorrow, so very risky. The $23 put expiring on the 28th. Yeah, so just at the very end of the day, 1,000 contracts, $374. So pretty cool to see that data there. And so what we can see in the open interest down here is it was below 3,000 just a few days ago, did get an increase by about 900 contracts, getting to around 3.7 thousand contracts open. It did dip by about 200, but we did have a volume today of 1.8 thousand contracts. I suspect a good amount of that will be, potentially taking profits, although it depends on when they were purchased. They may have not been in the green. So will be very interesting to see what the open interest is for this tomorrow. But, all of these puts, I must say, with them being above $20 a share for those strikes, and with the price of Rocket Lab being below $20 a share, they're all in the money puts. So they're not necessarily gambles suggesting that there is going to be a volatile move to the downside. They're kind of just like safe bets. Putting money on, this being a bear flag, that it did break down from this uptrend, this channel that it was forming on the way up, this downtrending channel that I thought we'd be breaking out from. All of that stuff looks like it failed. And it just seems like, unfortunately, we are likely to be heading down to around 1550 or maybe even worst case scenario 12. But I suspect the 200-day moving average will be a nice dip buying level. But that is, just unfortunately, right around $13.50. So we've got from current price, which is around 17. I'm just going to do it from this 1618 here, getting down to that 200-day moving average. That's about a 22% drop to the downside. So, if you're long-term bull and you want to be holding this forever, if your average is super low following the big runs, for me, if I was in your position, I personally, again, not financial advice, I personally would probably just wait to add or wait to see how it responds to that 200-day moving average. If it does fill this gap, And, maybe we wick below that 200-day moving average, and maybe $12 or 12.15 marked here is a nice dip buying level to just add a little bit on that dip, but then to wait and evaluate and see where it goes. So yeah, I just feel like this is going to continue going down. But yeah, it's been an incredible run. Congrats to those of you who are buying down here in the sub $5 range. Even if it's pulling back a lot here, you've had a very impressive run. So congrats to you guys. Congrats to being bullish on, great company, great stock. And yeah, I just think that there are going to be more opportunities just a little bit lower. And so, I just wanted to share my perspective with you guys. But, as always, those are just my thoughts. If you found them helpful, make sure you like the video, share your thoughts in the comments down below, and make sure you subscribe to the channel for more videos like this. And yeah, I'll see you guys tomorrow morning for pre-market prep. Take care.